Welcome to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Prashant Sabapathi and Ozzie Culhagil of Elite Income Advisors. And to our viewers at home, do you ever ask yourself, how do I pick the right financial advisor? What questions should I ask? How do I know if I'm in the right care? Today's show is going to talk a little bit about that. Prashant, how are you today?
I'm doing great. Thanks. How are you?
Fantastic. Thank you so much for asking. And Ozzie, how are you?
I'm doing great. Thank you.
Good. I'm so glad to see both of you. And we kind of coordinate all with our colors today. We didn't even plan this. Yeah. I love it. Well, I'm so glad that we're talking about this today because so often people are asking themselves, how do I know I'm with the right financial advisor? Should I be asking certain questions? Should I be looking for certain things? Let's talk about the difference between a fiduciary versus a broker, Prashant, if we could start with that.
We get this question a lot. Are you a fiduciary? And I think that we should be asking our advisors that very question. So a fiduciary is someone who is bound by law to be giving you investment advice that is suited to be in your best interest, not in their own best interest. So I think that's really important. The way I kind of look at it is, you know, if you go down, you've been to one of those butcher shops before, right? You go down to the butcher shop and you walk in there and it's, you know, they got the veal and the pork chops and everything else. And when you go to the butcher, you're going in there because you trust that salesperson to sell you that piece of meat because that's what they do all day, right? But you notice how the butcher will never tell you, hey, your cholesterol's getting a little bit too high. Why don't you go see the fishmonger down the street, right? And to me, that's the difference between a broker and a fiduciary, right? So when you go to see a dietitian, whether the dietitian loves meat, loves fish, is a vegetarian or whatever, they're going to give you advice that is in your best health.
Yes.
And that is what a fiduciary is. They're not worried about what is in their best interest. They're bound by law to give you advice that is in your best interest. And so as you're out there searching for the right partner in your retirement planning journey, I think you have to be working with a fiduciary, someone who's truly looking out for your best interest. If you don't know whether your advisor is a broker or fiduciary, you should start by asking, and then you should start by checking out their licensing, checking out their independence, making sure that they're bound legally to give you advice that's in your best interest.
And you wish everyone had that standard because that's so important, Prashant.
It really is. And one thing I will say, just going back to the butcher versus dietitian analogy, is I think a lot of people think that their butcher is a dietitian. Okay, I think a lot of people think they're working with a fiduciary, but they've never investigated it far enough to ask and truly be sure. So I think it's a question that is absolutely worthwhile.
I'm not sure if I'm going to be able to go to the butcher shop now. My whole thing is changed.
I'm the vegetarian, so I'm going to go to the garden.
There you go.
I'm a garden wife. So, Ozzie, let me ask you a question. The difference between focusing on distribution versus accumulation, why is that important, especially in the retirement years, working with someone who's going to help you navigate the fact that you won't have a paycheck anymore?
Yeah, so like when we are in our working years, what we really do care is how much money we can accumulate. And everyone has a number in their mind. They don't really looking at in a perspective of what income do they need, but they are trying to accumulate. And when you get to the retirement age, what happens is, what is the most important thing? Is the distribution, because you're not working anymore, you're not accumulating anymore. Now is the time to take that money out. But we also need to be a little bit more careful. When we are taking money out, we have too many different resources. We have IRA accounts, Roth IRA accounts, after-tax accounts. So we have to be, you know, paying attention to the taxes as well. That's why it's really important to, when you get to the retirement age, to work with someone who is not really in an accumulation, but in the distribution, you know, area that's going to look up for your best interest.
And is that a question that you can ask as well to your current advisor? If you're sitting in the viewing audience today, can you ask them, hey, Joe, do you specialize in accumulation or distribution?
I think you can ask. Is that most of the people that we do know of, they're really, really great accumulation people.
Right.
You know, most of the, you know, big box stores, they are great on the accumulation. But some people don't like to deal with the distribution because there's a lot going on, like the taxes, after tax, before tax accounts.
And you have to be very careful as well, right? Like you don't want to make a mistake when it comes to distribution either, because if you screw it up, whether it's even if it's just totally an unintentional mess up, that's the type of thing that could potentially derail your entire retirement.
Absolutely.
Right? And so you want to be really careful. I totally agree. Accumulation versus distribution is a big deal, but I don't think it's enough to just ask. I think that you should ask, but then you should also get proof, okay? At the end of the day, you should have a written plan that actually shows what those distributions are going to look like. What is my paycheck in retirement actually going to look like? What is it going to look like net after taxes, and how do we index it or adjust it to keep up or even outpace the cost of living? You should have proof that your retirement paycheck is going to be exactly what you need it to be to live your most fulfilling version of life at that stage.
Fabulous point. Thank you, Prashant. What about asset management versus financial planning? Asset management versus financial planning.
This goes back to exactly what Ozzie was talking about, right? Accumulation, distribution. You have specialists that are investment advisors. I was actually just sitting down with one of our TV viewers. They came into the office. They scheduled one of those free consultations with me, and we were just chatting in that first visit, and I always am really interested in what brings people in. So it's one of the first things we talk about. And I asked them, I said, well, what made you decide to even schedule an appointment in the first place? And they said, we're working with somebody, but we think that that advisor is just an investment advisor. And I said, tell me a little bit more about that. What do you mean? And they said, they don't really give us any advice on when is the right time to collect Social Security. You know, on TV, we heard you talking about the importance of having a paycheck. All they're doing is helping us grow their money. And they were actually very happy with the job that that advisor had done with them in terms of helping them grow. But they'd never shown them how they can take all that growth, harness it, and actually turn it into a retirement paycheck that was meaningful to them while managing the taxes. So asset management is only one small piece of the overall process. Retirement planning and financial planning goes so far beyond that.
Absolutely.
And I think you have to have a comprehensive and coordinated plan that allows you to live life the way that you want to live.
100%. Ozzie, what about the importance of legacy planning and tax planning when it comes to choosing the right advisor?
Again, like when it comes to the legacy planning, most of the time the people needs to go find the expertise.
Yes.
And the lawyers are the best people to do that. But you also, the lawyers needs to work with your, financial planning or your advisor, because sometimes the people, missing the part of their overall portfolio. But to me, is the important part is if something happens to you and if you die, what kind of assets you are going to leave it to your heirs, right? When we look at it, 401ks, before tax monies and everything, when we do leave that, there is a lot of tax consequences that our heirs needs to.
I think that's a great point. You said what kind of assets are left for the heirs. What about what kind of liabilities? What kind of burdens are you leaving for the heirs too? Right.
That's true.
And so I think you have to look at both sides of that. You might have done a great job saving money, and yes, as a result, you're going to leave it to somebody. But what kind of problems are you leaving them as well? What is it going to do to their income taxes?
It's true.
Are there going to be death taxes if you're over the estate tax exclusion? We have a couple clients that are over the estate tax exclusion. And so we had to do an extra layer of legacy planning to plan for how we're going to deal with the estate taxes, both at the federal and the state level, for those particular clients. And look, if your advisor has not worked with your estate planning attorney to create that comprehensive and coordinated financial and legacy plan, now is the time to start. Folks, we are operating in one of the most favorable marginal tax codes in American history. Let's think about that for a second, and let's find ways to take advantage of that. If you've never gone through that process, we're going to open up our phone lines right now. The phone number is 833-308-5200. It's 308-5200. You dial that number, you're going to be able to schedule a no-cost, no-obligation visit with our team at Elite Income Advisors. You come in, you meet with our specialists. We're going to take you through a comprehensive Retire Smart road mapping process, help you put together a true written income plan for the rest of your life. If you're unsure where your paycheck's going to come from, how much you might end up paying in taxes throughout the course of your retirement, if you don't know whether your income is going to keep up with the cost of living, you should pick up the phone, schedule that no-cost, no-obligation visit. And as an added bonus, you can also scan this QR code or visit retiremaryland.com. I'll actually be happy to give anybody who visits the website a copy of this book. It's called Fiscal Health, Retirement Wealth. It's your prescription for income generation, tax management, and financial peace of mind. Call now.
Prashant, thank you so much. Ozzie, thank you so much. I personally love this book. It is amazing. Fiscal Health, Retirement Wealth. It is incredible. You don't want to miss the opportunity to grab your copy today. That number to call in, 833-308-5200. If you're rushing out the door, you can grab your smartphone, click on that QR code at the bottom corner of your screen. That'll take you right to the landing page of Elite Income Advisors, and you can schedule your time accordingly. Remember, you've worked your entire life to get to the retirement years, and you deserve to have peace of mind. You deserve to be working with the right financial advisor. We'll be right back momentarily to talk about behavioral finance and also some debt reduction strategies. Stay tuned.
We have a great team. First of all, we wouldn't be able to do anything that we do without our fantastic team of both advisors and service and support specialists.
We are trying to hire the best of the best, because also the servicing the clients is an important part of our business.
Once you become a client, you'll not only have interaction with your advisor on an ongoing basis, but our great support team.
And we are very proud of that what we do at the Elite Income Advisors, the service. Whenever someone calls, whatever they need, they don't need to call the 1-800 number. We want them to call us. We'll take care of whatever they need.
Marrying the financial plan with a good tax plan and a qualified CPA, and then having a support team to help you through navigating through retirement, that's what I think it's all about. And that's what really creates a comprehensive financial plan.
Welcome back to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Prashant Sabapathi and Ozzie Culhagil of Elite Income Advisors. In our first segment, we talked all about the importance of choosing the right financial advisor. We're going to talk a little bit about behavioral finance right now and also some debt reduction strategies. Behavioral finance, Prashant and Ozzie, I love this concept because obviously it talks about how people react behaviorally, but also emotionally a lot of times when it comes to investing.
I mean, managing emotions, I should say, it's one of the biggest parts of financial planning, specifically when it comes to investment management,
yes.
right? With market turmoil, and we've seen some of that lately, it's really difficult to keep your emotions in check. It's one of the most important things you can do is have a true plan in place so that when markets go crazy, and they always will,
yes.
they have in the past and they will in the future, I'm sure, markets are going to go up and down. You have to be able to stick to your plan. But I think a lot of times people adhere to herd behavior, right? They see everyone else doing something and it causes them to do it as well. Whether it's right or wrong for them is almost irrelevant in their minds. So we got to break that cycle, number one. Number two is confirmation bias, right? When we convince ourselves of something, we're likely to act on that thing, whether it is rational or irrational. And so we have to overcome these types of things. And that's really the behavioral side of investing. It's one of the most difficult things to overcome. In my experience, having helped so many people retire, Oz and I both, is you should have someone you can lean on during the tough times, okay?
Yeah.
Look, when markets go crazy, what you should do is you should be able to call your advisor and just have them talk you through your plan again.
And they need to pick up the phone, right?
And they need to pick up the phone and they need to call. Or look, if you don't have an advisor that you can lean on, it's a great opportunity to get a second opinion and get a partner in this process so that your plan doesn't get derailed when things go crazy.
I love that, and I love how you said confirmation bias. It's how I base if I can have a cookie or not. Yes, Cynthia, you can have the cookie. You're on the Peloton.
you and me both.
Right? So, Ozzie, let's switch gears a little bit and talk about some debt reduction strategies. There's a difference between good debt versus bad debt. Can we spend some time talking about that?
Sure. When I looked at it and the client comes in and we look at their debts, and some people pay off their mortgages and everything, they don't have any debt, and versus that some people comes in and they have the house mortgage, which, I think that's normal most of the time because, that's not going anywhere. And the car notes, like if it's, in my opinion, if it's less than, 5%, 4%, the car notes are not that bad. But when I see the credit card debts and when we look at this credit card debts, believe it or not, the people do not pay attention, how much are these interest rates are. And when we tell them that you're paying 19.99, no, I'm not. Like, yes, you are. Like, did you pick up? Because all they looked at is what's the minimum amount that they have to pay.
Yeah.
And like they're just like paying the minimum amount, then that doesn't go anywhere. You don't pay off anything. Like, especially when it comes down to getting ready to retire, you don't want that kind of like student loans or the credit cards that you don't want to have that kind of debts in your balance sheet.
That's true.
One of the things I think is really important is we always say debt really becomes an issue in the absence of an income to service that debt, right?
That's true.
Now, of course, in retirement, when our income potentially changes and we kind of transition to a little bit more of a fixed income, we certainly don't want to have 18, 20, 25% interest debt. But let's say you're thinking about carrying your mortgage into retirement, or let's say that, heaven forbid, you do have to buy a new car when you get to retirement, right? You might have a car payment. I think the question is, are you always going to have the income that you need to service that debt? Debt only becomes an issue in retirement. Lower interest rate debt only becomes an issue in retirement in the absence of an income to service that debt. And I think that's how we have to look at it, is the higher the income is, the better the outcome will be when we get to retirement. So let's start thinking about ways we can increase that retirement income that goes into your pocket.
I love that. And what about the importance of creating a spending plan?
I think it's just the opposite side of the equation, right? Look, at the end of the day, retirement is just about money coming in and money going out. If you visit our website, it's eliteincomeadvisors.com, you go to the top right-hand side corner of the webpage, there's a resource center, and there's podcasts on there. There's previous episodes of Retire Smart Maryland television. And this is something we talk about all the time, is the importance of understanding money in and money out. So money in is this idea of building that written income plan. But Cynthia, to your point, money out is developing a true spending plan. Let's map out what you want your life to look like. And more importantly, let's map out what that's going to translate to in terms of real dollars. Maybe you total all that stuff up and you find that you're going to need $7,000 a month, hypothetically, to retire. Well, now what we're going to do is we're going to compare that $7,000 in spending to all your sources of guaranteed foundational income. If we have more expenses going out than income coming in, then you have an income gap, and that is something concrete that together we can sit down and help you address. Folks, if you don't understand your money in and money out situation, you should pick up the phone right now and give us a call. We're going to help you figure out whether or not you have a gap in your retirement income. If you did have that gap, wouldn't you want to know about it sooner rather than later? And wouldn't you want to have a written plan that addresses that long before you ever got to retirement? We're going to give you that opportunity, but it's on you to pick up the phone and give us a call. It's 833-308-5200, 833-308-5200. Schedule that no-cost, no-obligation visit with our team of income planning specialists at Elite Income Advisors. Come on into the office. Let's design that Retire Smart roadmap for you. Make sure that you are on track for the retirement that you deserve.
Prashant, thank you so much. Ozzie, thank you so much. To our viewers at home, the number to call is 833-308-5200. That's 833-308-5200. Or you can grab your smartphone, click on that QR code at the bottom corner of your screen. Even simpler, takes you right to the landing page of Elite Income Advisors, and you can claim your time accordingly. We're going to take a very short commercial break. Don't go anywhere. When we come back, we're going to talk to Prashant and Ozzie about how do you build your financial house and what is the bucket approach. Stay tuned.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Prashant Sabapathi and Ozzie Culhagil of Elite Income Advisors. In this segment, we're going to talk about the importance of building your financial house, if you will, and what is the bucket approach. So, Ozzie, I want to ask you, let's talk a little bit about someone building the financial house, if you will, and also the buckets that are used to help that person.
So what do we do when we build a house, right? The most important thing is the foundation. Which
Absolutely.
The foundation, in my opinion, when it comes to the retirement, is the guaranteed income stream that we are going to have that we cannot live without.
Yes.
So what are these? Social securities, pensions, and whatever is that necessary to close the gap between our incomes and the spending. We take all this and we put that into one place that we cannot really live without. What we called in our office is the needs. And I call that in the bucket is the green bucket, which is safe and secure. You don't want to lose money in that bucket. You want to make some money, but you really don't want to lose the money.
Okay.
On the other hand, we have another bucket. We call that is the blue bucket, which is these are the things that we usually keep money in the banks, on the CDs or money market, that if something comes in, urgently we need to get a heater or air condition, so we have money on the side to take care of that things, and we don't need to take out a loan or anything like that.
Yeah.
And the other one is the red bucket. And how do we do the red bucket?
Yeah, so
Okay.
that's when, going back to the house example, we have our foundational income, just like you talked about, but then what we're going to start to do is we're going to start to put up the rest of the house. We're going to build the walls, we're going to build the rooftop, and so with that being the case, I look at the walls as more low to moderate risk investments, things that are not going to be super high in risk. And then when we're getting into putting on the roof of our house, that's where we're going to get higher risk investments that are designed for the longer term to outpace the inflation rate, grow your money in a more aggressive way. And you know what's really interesting when you're building this house? You would never put all the money that you have in the foundation of your house. You wouldn't put all the money in the roof, and you wouldn't put all the money in the walls. I think it's really important to have money in each one of these different areas. You know what's really interesting? When those nasty hurricanes happened in Florida some time ago, and we have some clients that retired, moved to Florida, and they have some houses down there. Nobody ever called me up after the hurricanes and said, "Hey, Prashant, my house blew away," because it had a really strong foundation. You know what they did say? Hey, trees blew over, roof maybe was a little bit damaged. And that makes sense to me because the roof is the highest point. It's going to be more prone to the risk of something like
the elements,
a hurricane and the elements. Exactly. And so just as you don't want to have all your money in your basement, you don't want to have it all on the walls, you don't want to have it all in the roof either. Let's make sure that your money is positioned in a way that it will always take care of you and the income needs that you have. And then let's position the rest of it to grow, grow, grow.
I love that. Well, a lot of people are asking themselves the question, how can I create my own pension? Ozzie, what advice do you have for people that are looking for creating their own pension, that income stream, since they've left their job?
So what we always talk about is when you're working, the paychecks are coming. And the day that you stop, the paychecks start. So we have to create our own paycheck, which we talked about earlier, is to me, most important is doing the expense spreadsheet first.
Okay.
A lot of people don't really realize how much they are spending it when they are working it, because the money is always coming in, they are saving money, and they have enough to spend. And sometimes I ask that, how much do you spend? $4,000. Well, if your mortgage is $3,000, I don't think you're spending $4,000. You're spending more than that.
More
and
than
we
that.
start doing the spreadsheet, and we found out they spend $8,000. And if they are making it $6,000, we do have an income gap. What can we do to close this gap? So we have to find a way that, you know, we can put the money in somewhere that we can't lose, but can generate an income stream for the rest of our lives, which goes back to that foundation.
Yeah,
Sure.
and I actually went through this with a great client of ours. They were working for a big tech company, and what we found is they had a gap in their income. They're retiring in 3 years' time.
Okay.
They had a gap in their income of about $3,500 per month. And so we totaled up all their Social Security, pension, and compared that to their expenses. And what we found is that they were $3,500 a month short in meeting their income target.
Okay.
They had done a great job saving money, had about $2.5 million. So they had done a really excellent job with it. And what we were actually able to do, we helped them create their own pension. So with the $2.5 million, we took $500,000, which is just about 20% of their overall portfolio. We deposited that money into a fixed indexed annuity. And what's really cool about the fixed indexed annuity is if we put that money in and we waited 3 full years to take that, the annuity would kick off exactly the $3,500 a month that they needed to close their income gap.
That's amazing.
So we used 1/5 of their money to give them all of the income that they could ever want or need in retirement. Now, that was what was available at the time that we did it. These solutions change. And what's really important is that if you don't know how to close your gap in your income, now is the time to take a look at it. Is an annuity the right thing for you? We won't know until you come in and figure out what makes the most sense. Last opportunity, folks, for today's program to call the phone number, schedule that no-cost retirement review. It's 833-308-5200. You can also scan the QR code below. That'll take you to a page where you can enter some information in and schedule that no-cost, no-obligation visit with our team of specialists at Elite Income Advisors.
Prashant, thank you so much. Ozzie, thank you so much. To the viewers at home, most specifically, thank you for spending time with us today on Retire Smart Maryland. That number to call is 833-308-5200, or please grab your smartphone, click on the QR code at the bottom of the screen. Be safe, be happy, be blessed. We'll see you back 1 week from today. Take care now.